Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Thursday morning, March 4th, 2021. Thank you so much for joining me today. Well, we called it about a week and a half ago, 2 weeks ago. We came back from the three-day weekend that we were seeing signs of the sector rotation cracking. The smaller cap stocks were continuing to go higher. The big tech stocks were not. And we're kind of seeing that manifest over the last week and a half. We've still been actively trading. We've still been hitting every single day trade and swing trade that we've been calling, just having a really hard time looking for follow through right now. So I want to get this across very clearly. If you're watching this, you obviously want to be making money in the market. You want the stock market to make you money. It is critical that you recognize two things. Number one is that you admit that you always have to take your strategy. You can't cherry pick and say, well, this time I think it's going to work. This time it might work. You need to do that every single time. Every time you get a trade that matches your strategy, you have to put it on. However, there's a huge part of trading that's really not talked about enough, which is understanding position sizing based on your conviction level. You can have a trade, and I'm going to show you an exact example in a second, where you really like the idea. It's still holding the bid, as we call it, where it's not pulling back at all. And that might be, let's call that your A+ conviction level. Then you might have another trade that you still like, but it's not A+. And I'm going to show you how to very quickly to identify that in two different ways. That second scenario, you might have, it might be a B+ position sizing. So what you need to have in your trading plan, and this is critical, is you still want to be a buyer of that stock, but you're not going to start out with the same initial position size because it's B+ versus A+. And this is really where a lot of traders get into trouble, for lack of a better way of putting it, when it's not necessary. You still like the idea. It's not the same deal as maybe an A+ trade because it's a B+ trade. And they just trade the same share size all the time. They take the same risk all the time. And that's just silly, quite honestly. If you really aspire to see your account go like this, higher and higher and higher, you need to understand the difference. So what we're going to talk about today is identifying those two different kind of trades. We're actually going to take a look at different scenarios today, some that are showing relative strength, some that are actually strong but pulled back for a few days, where I'm actually hoping for a lower opening and then a snapback if we see certain criteria. So I'm going to give you examples of both of those. So I'm going to first walk you through what I just said, just a really quick lesson on position sizing and how that should affect each trade decision. So if you find these videos helpful, especially the stock picks, give us a thumbs up. That would tell me that you like these kind of videos. Also, when I do educational videos, give us a thumbs up so you let me know that that's the kind of education that I can help you with. And of course, click down and subscribe. That would mean the world to me. It shows that I'm providing value for you. I'd really appreciate it. If you have questions about what we talk about in the video, absolutely leave a comment too. We always get back to you the same day. I'd really like to hear from you. I want to know what you're struggling with. I want to know what your biggest challenges are because that's kind of my passion. It's my mission because, look, we're all in the same trader path. Maybe I'm just a little bit further down the road from you, but I want to help you. So I need you to pop a comment in there. Let me know what you're struggling with, and we'll get to that, especially in a new educational video. So we're going to head on over to the screen. We're going to take a look at, we're going to start out with the SPY, and we're going to talk about the two different scenarios. So the first scenario is where everything is really, really good. And we're going to zoom out a little bit. And if we could just take this from here, from November through, let's say, mid-January. So you can see here, this is the 20-period moving average, and I use simple moving averages, and this is the 50. So again, just eyeballing, just a really quick lesson on position sizing. If your stock is above a trending 20-period moving average, that might be considered one of the A+ trades. It's staying above and holding the bid over the last 4 weeks. So you might say that is relative strength over the last 4 weeks. If it breaks the 20 and moves down into the 50, which is the 50-period moving average or the 10-week moving averages, however you want to look at it, this is kind of like the phantom zone where it's still a buying opportunity, but not quite an A+ opportunity. That's when you would start to look for entries below the 20, but above the 50, and that would be your B+ position sizing. So you can see how just using the SPY here, there's different scenarios. So we're actually going to open up below the 50 right now. So this means that we're not getting help from the overall market. Now we're going to be dropping down to sectors and individual industry groups, and we've had quite a few of them that have been really rotating hard. Tech stocks are getting hit, but you can see here that energy stocks are still actually pretty strong. We got stopped out on a trade in ExxonMobil yesterday that actually came back up, but you can see what I'm talking about here, and we discussed them yesterday. So just like that, you should be able to put together a list in a very simple manner of stocks that have been strong, showing relative strength over the last 4 weeks versus the last 10 weeks. And obviously the ones that are showing relative strength recent, those are what we might call momentum trades. So just a quick lesson on how to find those ideas. So as we said, the market looks like it's going to open up down again. So not the worst thing, because I'm going to walk you through some ideas. I'm going to use, let's use AMAT as an example. AMAT actually, you can see clearly here in the sector, has been strong. So what we're actually looking for now that the stock has traded twice, lower lows, lower highs, and closed near the lows, I am actually looking for this stock to open lower, find buyers because it's already strong, because it's showing recent 4-week momentum, recent 4-week relative strength, and then snap back and look for a buying spot above yesterday's low. So I'm going to give you a couple of ideas that meet that criteria. So AMAT, you can see, John Deere, how good the relative strength is here. FUTU, gotta be careful how I say that, right? FUTU. Okay, you can see this one broke a little bit harder, but you can still see the idea. Next, we're going to take a look at MU. Okay, you can see the same exact thing. And Twitter. Twitter is one that we've been looking for a little bit of a better spot. I'm actually really excited about getting involved in Twitter today. Now, this is the thing. I don't want to be taken out of context. This is very important. So what I'm looking for is a lower opening and then a reversal. And then I'm looking for that snapback into yesterday's price action. I'm going to show you another stock that actually did it yesterday, but would set up a buy today. So again, be very clear. There's two parts to the actually 3 parts, right? There's the 4-week relative strength. There's the 2 days pulling back, obviously in sync with the rest of the market. But here's the important part. Closing on the lows both times. We actually want these strong stocks to close on the lows because profit taking came in. We want one more flush to the downside this morning to kind of get the best price to expand the difference between the optimal entry point and a potential profit target, and then see buyers step back in and push it higher. Now, this is where tape reading comes in handy. This is where you need a line in the sand. This is where you need a level that says, is it getting closer to or further away? Now, you feel like tape reading is confusing. You feel like you don't know how to do it. It's not that little ticker that goes across the bottom of this line on CNBC. You already know how to do it. Now, think about what I just said. You need a line in the sand. You need a price that says, is it moving away from that or is it moving away from that in that direction, right? So just pick one price. Maybe pick today's opening price. Maybe pick yesterday's close. It doesn't matter, right? And you're like, but gosh, that sounds so complicated. It's not. You're already doing it on every single trade you're in. Think about it. Every time you're in a trade, you have your entry price, and it's going up or it's going down, and nobody knows better than you if that stock is strong or weak. Nobody knows better than you if buyers are in charge of that stock or sellers. So you just need to pick a price. So what we're going to look at today is we're going to use today's high. So if we open lower, we're not doing anything until we get back above the opening price and start to trade higher. But the entry is going to be yesterday's low. So if we use, I'm going to use Twitter as an example, just to really drill this home and make it super, super simple. So you can see that we have this setup in Twitter. We're looking for Twitter to open lower, which is what it's going to do. But reading the tape now, we're looking for it to trade back above yesterday's low. That's the line in the sand that we're looking for to say, okay, buyers step back up. Now it's time for us to take a look. Now we have one other example of a trade like this, which is Caterpillar, where it actually opened lower and buyers actually came back yesterday. We didn't initiate a long yesterday because of the overall market. Remember, we said A plus versus B plus scenarios. The market crashing, you don't want to initiate what we call a bullish U-turn above that 20-period moving average, above that 4-week line, because the market was pulling back. So these are decisions you make as the market's unfolding, and you say, okay, if this plus this, awesome. If this, but it's missing that, okay, we can still take the trade, but not yet. Different scenarios. So Caterpillar is going to be on the list as well because it had some good relative strength yesterday. On the short side today, we're going to be looking at NIO. NIO is actually opening down further again. We had NIO as a short sale, and DDOG actually below 90 if it opens up. It looks like it's going to open up below 90 as well. So we have trades on both sides of the market, and it's pretty interesting because there's opportunity. And what's interesting is we actually did a live trading session yesterday, about 90 minutes. I got kind of excited. I love it's kind of going old school when I had my trading firm back in New York City. And we talked through everything from opening to watch a list to putting together a watch list to using it properly during the day. I love doing those kind of sessions because you kind of get out of my mind into what I'm thinking all the time. And then all the members of the community can watch it and take notes and learn to make better decisions. So what my goal is, my passion for this is right now is to help you understand finding great trades is the first and number one priority. Entries and all this other stuff, none of that matters if you're not in a good idea. So your job is to first find order flow, find where the deep pockets are doing something. We just gave you some examples there. So is the bear market here? It's kind of close. It's certainly kind of close. You know, we have the stimulus package kind of hanging in the background. We have positive vaccine news kind of hanging in the background. The question now is all of that priced in? We had a really solid rally coming off of November. So here's the thing I want to get across. Even if the market starts to roll over, and I kind of think we're in what we might call a potential change of trend right now, if the market rolls over, we will still be able to find pockets of order flow, pockets of opportunity that as the market shifts, different sectors, different industry groups, it's going to be good for as the economy and the world starts to open back up, and we'll find those for you. We just gave you some examples today. So if you have any questions about this, definitely click down and leave me a comment. I'd love to hear about questions you have about some of the stuff we talk about. Please give us a like if you find this comment, if you find this if you find this content valuable, and definitely click down and subscribe so you get updates. So thank you so much for joining me today. I really, really appreciate it. Thank you so much.